Hi, Alexis.
Good afternoon, everyone, and welcome to today's session. I'm Alexis, and it's my pleasure to be your moderator today for this insightful discussion. Today, we will dive into a timely and important topic, navigating economic uncertainty, strategies for resilience and growth. I'm joined by a fantastic panel of speakers, each bringing deep expertise to the table, and I'm confident we will gain valuable insights from their experience. In just a moment, I will invite Amel, Philippe, and Stephane to introduce themselves. But first, I'd like to express our gratitude to CFO Connect for hosting today's event. As many of you may know, the CFO Connect Summit was created for finance leaders to connect and exchange on the most important topics impacting finance teams. CFO Connect is a global community of more than 12,000 finance leaders powered by Spendesk. Before we start, I would like our speakers to introduce themselves. I think Philippe from Deel will be joining soon. So, Amel, maybe would you mind starting, and then maybe Stephane?
Sure. Thank you, Alexis, and hi, everyone. Thanks for having me. So I'm Amel Chouikh. I'm the head of finance for Uber, covering France, Middle East, and Africa. I'm super excited about the conversation today.
Thanks, Alexis. Hi, everyone. I'm Stephane Dehaies. I'm the CEO of Spendesk Financial Services, the European leader spend management in Europe. I'm very excited to be with you today and to join this great panel.
Great, thank you. So again, very happy to moderate the session today. Quickly introducing myself. So I'm the CFO of Hexa, a startup studio dedicated to B2B SaaS. We've created more than 40 companies over the last 10 years, of which Spendesk, Aircall, Front, and many others. So as a shareholder and board member, I can tell you that this topic is being discussed a lot, and especially at the moment as we approach budget season. So very happy to be here with you. We have a chat box and a Q&A box on the side of your screen. I encourage you to use the Q&A box for any questions you have during the session. We will start with an initial round of questions among ourselves for the first 20 minutes, followed by an open Q&A. So don't forget to ask questions and to upvote the question that resonate most with you so we can prioritize them. So let's dive right into today's topic. Maybe before we discuss the specific actions you've implemented within your organization, let's maybe take a step back, and I would be very happy to have your perception on the macro environment. So maybe I'd love to start with you, Amel. Could you share your perspective on the current macro landscape, and what are maybe the key factors that you are closely monitoring right now?
So I think on our side, at least on Uber, it's a consumer company, right? We operate on B2C. I think, again, the market and the definition will be different when you're in a B2B industry as well. I would say on at least the geography that I cover and the industry where I operate, if I have to define our current macro environment, I would say it's really defined by volatility. And it's really across all the markets, all the key markets, and especially in Middle East and Africa. You have really two main angles. The first one is really regionally. We have a lot of geopolitical instability, inflation been pressuring the market, and it's been persistent now since COVID, since we exited COVID. So we have some macro shocks as well, waves being consistently coming back and forth. So that is creating a lot of instability and volatility in the regional market. And at the same time, if you look at globally, I think you're all aware the rising interest rates and the slow growth as well are really squeezing the consumer spending. So really those factors impacted quite significantly the transportation industry. What it means for us, it's really between two things, and it's really the fine balance that is really hard to achieve, and it's always a challenge to achieve, is how do we solve for short term and how do we become resilient? So where we do adjust our pricing, fine-tune our cost structure, and really try to push as much as we can on operational efficiencies to reduce our costs. But at the same time, we need to invest on growth, right? On long-term growth. So we're still looking for growth opportunities where we can expand our presence in maybe untapped region or really push down a bit more on innovation. So it's really always the difficult balance that we have to juggle with every day. The reality, I would say, is that the new norm is uncertainty. I mean, that's our new norm. So I think for us to, like, we really just need to focus on agility to be able to adjust quite quickly. And we leverage as well a lot of technology as well to really try to remain competitive and then push as well for growth.
Right, thank you. I think it's a very good intro for the session, because you've mentioned a bit all the topics we're going to address. Stephane, do you share Amel's views, and do you have maybe a different perspective given the nature of Spendesk business? Maybe you can complement.
Yes, so yes, fully aligned with Amel comments. So it's quite interesting because Amel is in the B2C world. We are in the B2B with the nature of the business of Spendesk, and we have to manage. I think the keyword is volatility, and we have to manage the volatility for a business. We are in a B2B business, SaaS technology business. And as you know, we develop also our new financial services business, Spendesk Financial Services, where we need to adapt to this volatility, but all the change we have in a regulatory business. So I think that's a keyword, and we need to adapt. I think as what is critical for our business, but also for our customer, because we are on a B2B business market, we need to adapt to ensure that customer can manage this volatility. And that's where we have to bring to bring a proper solution in terms of operational efficiency was quite critical during this period. But also, as Amel said, we need to adapt on the pricing and the key macroeconomic factors. And I would like to come back on this. When we are talking about the high volatility environment, we need to consider the microeconomic environment. For our business, we are very focused on the European market. Okay, so Germany, UK, Spain, France, and there is complexity in every country. Even if we are talking about a region, we need to adapt to the regulatory environment. We need to adapt also on our customers who have different constraints, and we need to better understand. We need to better understand how they can manage their future business planning. That's what is critical. So we need to understand what does it mean from interest rates tomorrow, how our customer can invest, how they can better manage their cash flow. It's quite critical on your business, because spend management is part of the solution. We need also to monitor the current and potential future impact on this macroeconomic environment, talking about interest rate, but we are talking about FX also. When we have customers who have a cross-border business, when they want to manage international expansion, what does it mean? And we need to manage the risk. We need to manage the risk with the customers, and we need to help the customer to manage their risk in terms of payment, cross-border payment. So that's all this volatility we need to manage. If we look on the economic uncertainty, we can see we are in a slowdown environment, particularly in Europe. Even if there is some good news this last month in terms of stability from a political perspective in some country like the UK and France, where after the tunnel of June, we can see some stability, at least in terms of we have some government in place. They have to work on budget. They have to work also the stability for our customers. The SMB and mid-market I need this stability. And that's why we need to monitor also all the political change, economic change in each country to adapt to our customer, and that's quite critical. I will say also that once the customers is looking to focus on their core business, because that's what you need to do during this volatility period, you need to make it simple. You need to focus on what is your core business. You need to focus on what should be the right pricing for your customers, and you need to monitor this transition. So that's why you you can bring also solution in terms of digitalization to better use the data you share with your customer to ensure they can manage this complexity. So it would be for our business very focused on B2B, the way we manage this uncertainty and complexity. But in summary, we need to continue to adapt, and we need to help our customer to adapt their how they manage their spend management, how they manage their working capital, to ensure that they are doing the right thing, and we can improve also our customer experience and operational efficiency on both sides.
Great, thanks. So I think we've set the scene. I see a lot in common between you two. Now that we talk about what's the context and where we are all operating, I'd like to move a bit on how we manage the risk and the financial risk management, and how you have been adapting to the dynamics we've just discussed. So maybe we can just continue with you, Stephane. You mentioned a lot of things, but could you concretely give some example on your strategies and how you adapt them to navigate into the current environment?
Yes. So first, you need to really understand what are the driver on this complexity. So we are working with our customer who are mainly CFO, coming from the CFO community. So we need to monitor this macro environment with the key data. We need to understand what they need in terms of funding, what they need to manage their cash flow, how we can improve their spend management. So all this data and all the solution we need to ensure not only to manage the financial operation for customer, but we need also to give the data to help them to better to monitor their cash during this period. That's the first one. I think we need also to understand how they manage the cost of funding and lending, if they have to invest or if they have to reduce their cost, because that can impact our business and their capacity to invest. And so all these factors who can impact the funding environment is critical for us. Other way to manage the risk management is to be very close from your customer, to see also from a pricing perspective in terms of the way we monitor the relationship and the services, if we are doing the right thing. We are working on to manage the spend of the customer. We are working also to manage their payment. What does it mean from a card spend? So that's very important to adapt also the pricing on this environment and in the priority of the customers. We need also to see how we can improve the customer experience, and mainly on the payment experience, because our customers are focused on efficiency. They want to keep it simple. They want to manage their invoice. They want to deliver their services and to ensure that they have to protect to protect their fund, to protect their payments. So to bring this high level of security, also to protect them on the fraud during this period, because we know that's a critical problem. So all this efficiency, security, and to keep it simple for the customer is very important from a process perspective end to end. And another in this environment, we make the acquisition of OCO with a procure-to-pay solution, because that's also an opportunity for customers to improve their process in terms of procurement with the proper data to ensure they can make the right analysis, to make the right choice, and to optimize their cost. So that's another way to help our customers to manage this uncertainty. I will say also that to be very close from the customer in terms of strategy, to understand what is important, is one of the key criteria we are currently managing at Spendesk.
Interesting. Cool. As I think CFO and investors, we all value the ability to assess and monitor performance through KPIs. Amel, at Uber, I mean, what financial metrics or indicators are you focusing on in this context? And have you observed any notable shifts in specific metrics over the recent months?
Yeah, so I think the good thing again, being a tech company, we have a lot of access to a lot of data, so which makes it a little bit, as a finance, our job a little bit easier. So we have tons of available data that we can always tap into. I think there's two elements again that we really monitor very closely. So you have from financial perspective, internally, all the KPIs internally, really from top down to the bottom line. And we really slice it in every angle possible to make sure that we're looking at the right product, the right geography. Is it profitable? Is it growing? And we try to really look at product portfolio, geography, commute, like use case as well, like as much as granular as possible to make sure that we have a good understanding of how our products perform at different stage and different places. And obviously, I mean, it's management. It's very management reporting. So we look at EBITDA, but we try to do it the way again the company is organized is that we look at P&L management, P&L where the regional teams or the operational team has control over. So we don't want to overwhelm them with information that are nice to have, but they cannot really control. So we kind of cater a P&L for them specifically on the things they can control, so we can monitor them and be much more efficient. And anything that they cannot control, we give it to dedicated teams. So typically, simple example as facilities globally is really managed by a facilities team who are experts on the topic, and they can really drive even at scale few initiatives, which again helps us. Again, you're less close to the market, but at the same time you're bringing expertise and efficiencies. Again, a fine balance to find in between. So internally, it's all profitability and growth. And externally, we track a bunch of elements that are relevant, obviously, to our industry. So it's between inflation rate, we've talked about it earlier, consumer spending, fuel price. Obviously, every time there is a fuel price increase, we have to reflect that into our pricing and adjust our pricing quite quickly. Otherwise, you will not have any drivers will get on the street anymore. Because again, the unit economics will not make sense for them anymore. So we have to be extremely close to those external elements and adjust almost on the same day. Additionally, I think, Stephane, you talked about it earlier, again, having a global geo footprint, you have a lot of currency fluctuations that are very critical, that can completely swipe your margin from one day to the other. The moment any currency, for example, any foreign currency get adjusted. We've seen it in Egypt, we've seen it in many other places. Nigeria right now, it's ongoing. So again, you have to adjust and reassess and rebuild your models, and making sure as well when you're making decisions, especially on investment, because it's all about it, right? Like, where do we put our dollars? Do we put it in places where it makes sense, where it's profitable, and it's consistently profitable on a long term? So that's kind of the things that we kind of quite regularly manage. But I would say we really try to be very, very data driven on our decision making. There's always obviously a lot of conversations around the data to understand it, to make sense of it. But all the decisions we make we try to be at least as consistent as possible across the board, across all the countries, the geography, to make sure that we're measuring our investment in the right way. Again, if we invest $1 in one country, not the other, we need to measure them somehow in the same way. So we use, again, all the data we have with the technology you have to make quick decisions. And I think, Stephane, you were referring to it as well earlier to it. Our decision making in terms of investment ask is almost weekly. Every week if we see market shifting or changing, we readjust our investment based on what we see on the market. So you have to really remain super close to the market and how things are moving.
Great. I think on our side as investor, and so we are much more focused on SaaS, as I said, but it's true that I think the key indicators we monitor on, I would say, backward looking, is net revenue retention. It's really key because we saw a big drop in the recent years, and we see some good trends over the past quarter. So it's something we really closely monitor. And when we tend to work on budget and BP, even for early stage companies, we really focus on the rule of 40 and or the burn multiple, which are becoming very, very key compared to what we've seen a couple of years ago. So.
No, definitely. And I think even when I joined Uber and then from the day I joined to today, you see a major shift between, again, money was available and it was okay as well to invest on growth. Now, okay, you need to grow, but you need to do it profitably. And the shift completely changed. And that's why as well, finance became as well central on the conversations, where before money was easy and it was somehow available. Today, it's much more difficult. So finance is much more involved in making sure that it's still delivering growth, because we still need this, we still need to invest, we need the company still to grow, but we need to make it in a bit more rational and a bit more effective way than before.
Yeah. So I think it's a very good transition to the next topic, which is efficiency. But before that, I'd like to welcome Philippe. I think he managed to join, so very happy to have Philippe on board. Philippe, maybe a quick question for you.
Sure.
It's great if you can just introduce yourself quite quickly, and maybe to complement what has been mentioned, can you explain a bit how you the organization of your team has evolved? Maybe you've seen new roles or positions becoming particularly critical in the current context.
Sure. So I'm Philippe. I'm the chairman, co-founder, and CFO of Deel. Serial entrepreneur. This Deel is my second multinational after a pause. I retired 10 years ago, from operations. Happy to come back and work with a startup. So in terms of organization and position, obviously, as Amel explained, you need to be data driven, you need to reassess, you need to understand, you need to know where you put your dollars. And I think that's extremely important. And obviously, FP&A roles became critical. And in my organization, I'm giving way more room to FP&A, this duet between FP&A and data, working together and planning, where are we going to put the money? You need someone at the lookout, checking what's happening, understanding the trends, because short term is fine, but you need to understand the trends and you need to be able to read the trends and understand where you're going on the midterm. So yes, in terms of position in organization, I think that definitely all what is related to FP&A, data, AI are super critical, and you need really to invest on these roles. I think that this is for the long term. I think that more and more, the necessity that we will see in the 5, 10 years to come to have companies that understand what they do, understand how to get to profit, how to be profitable, how to use their cash smartly and wisely, is the new world. The new world is not only it's not easy to find money outside, it's you need to spend your money smartly. So yes, definitely FP&A, AI, data, super important.
Cool. Thank you. Do not hesitate to write some questions in the chat, so we can go through them in around 10-15 minutes. If we continue, we've mentioned efficiency. I think it's a very big topic. We've all experienced the shift from a focus on hyper growth with scaling challenges to sharper emphasis, I would say, on efficiency in everything we do. Amel, maybe can you explain us a bit how this shift has impacted Uber, and could you give some concrete example on how you've improved efficiency at Uber?
Yeah. So I think there's two things, again, from business perspective as well, and then from finance, our job. I think from business perspective, again, the product itself is a technology embedded. So we use a lot of the AI as well, machine learning as well, and automation. Like we use the full spectrum of what is available out there to make sure that we're pricing better, the routing are better, more efficient. So just on like how we operate the business, and as well on the support, like how we're trying to reduce costs and improve as well if our support, customer support. I think we all seen the generative AI tools and what they can do, and quite incredible results when now you start talking with an AI to go through to solve some of the issues that you have with the product. We're trying to reduce as well the response time without sacrificing quality. And generative AI is today able to give us that. Before it was the bots that were not really very qualitative, where today, again, with the word of ChatGPTs and the others, we're able to get much better quality at a much lower cost. So clearly leveraging, I think, those tools saves at the global level quite significant amount, and as well improve as well the quality of the outcome. And as well, we try as well. There's a lot of testing around technology or what we can operate more efficiently. So on finance, for example, all the set of tools. So one of the things that I've doing a year ago is machine learning forecasting, and then we realize after a while, again, it needs effort. I think it's not magical. I think the outcome is amazing. The result, what you can get, the accuracy is much better. The effort is really reduced. The quality is much better, but it's an investment. So you can't expect a tool just to give you an amazing result and solve for all your problems or give you the perfect forecast accuracy. The machine is really like you have to teach it. And it requires probably much more effort at the very beginning than at the end. So then what's your current process? So it's always hard as well within the business to get people engaged, give them the vision and get them on board and telling them, hey, like long term, you will do less, but for now, we're asking you more. So it's a bit tricky and difficult to do the change management. But when you do it, the outcome and the result are quite fantastic. I think the forecast accuracy is definitely much better. I've seen it when I was working at Microsoft, where we were running as well machine learning models to do forecast accuracy was way better than human. But again, it needs to be taught, it needs to be corrected, it needs to be understood. So there is still an effort that is put in there. We use a lot of automation as well to try to reduce all the less value-added efforts in whatever we can. And then the last one, I think that's the most exciting, at least for me, is the generative AI. So we run pilots globally with ChatGPT, with Gemini, with all the whatever is available out there to see how we can use it. I think we're all very early in that journey. We're testing, I think, and that's probably the recommendation I would give is just test tools, see what is capable of doing, what is capable of offering. And then the idea is what we're trying to do as well is to see what are the use cases we can get out of it. Of course, there is, with the financials, always there is confidentiality consideration to take into account to make sure that the data is safe. But we're really testing to see what are the use cases. And honestly, I use it like quite regularly, just to bounce back ideas and to brainstorm, and having this, a bit of a smart companion that is available at 24 hours that I can bother with my questions. I think it helps, at least at an individual level, improve the efficiency for sure, and productivity is definitely much better. But I think it's a journey, and we're at the early stage of that journey, at least on the generative AI.
Great. Maybe Philippe, do you want to explain us like how AI is impacting Deel?
Sure. So super important for us. Let me give you one example. We've been, Deel is a lot about compliance and knowledge, right? So we created an AI solution, generative AI, that help our customers and our people and our new people that we onboard to understand, and to have answers to lots of questions on employment, notably on compliance. And the result after less than a year is that we divide by 8 the number of tickets that our people at support have to manage. So extremely impressive result, lot of quality, lot of information, lot of transformation, acceleration of onboarding on new people. Think about all the lawyers that we are having, or the customer success manager. We for sure use AI also on finance, on for FX, and for planning the treasury and the demand. I think that everybody has his own use case, but it would be a pity not to use AI today. You know, it became very simple to do, and find the right use case where you can improve efficiency, quality, and eventually, you know, at the moment in time, you can also use it to monetize this data that eventually you have home one way or another. So that's good experience for us.
Thanks. Very interesting. So sometimes efficiency is perceived a bit negatively. Stephane, I know this is a topic you're passionate about. So could you share your thoughts on how efficiency has driven value creation at Spendesk on a more
Yes,
way?
it's yes, fully aligned with the value creation that can bring also operational efficiency, because usually people think about cost cutting, cost management, cost out when you say operational efficiency, but that's also an opportunity for us to improve the process, to improve customer experience, because we need, as you said, in the SaaS industry, we are moving to a funding growth paradigm, to growth and profitability, as Amel said. It's very important to work now how we can continue to grow and to bring profitability. So of course there is opportunity to reduce our costs, to be more efficient, as Philippe said, to bring more quality on the data, and to anticipate also the future. I think that's quite important, and that's what we are doing at Spendesk. So a couple of examples. We can, of course, improve customer success, customer experience on the day-to-day. Why? Because more data, more anticipation, and able to bring solution to the customers. We can also navigate on the very complex regulatory and compliance environment. So that's quite important. That's quite important also to have all this solution at Spendesk, because we are in the financial services industry now with the platform SFS, Spendesk Financial Services. So we can navigate with all this information, and particularly when you have a cross-border business, when you have to work on a different country, the specificity of each country from a regulatory and compliance perspective, AI and general AI can bring a lot of solution. We can also increase the profit margin. We are talking about profitability. That's also, you are talking about the net retention, which is critical today in the SaaS industry. That's very important also to see how we can bring efficiency on the day-to-day for the customers, and to improve how you can better cross-sell, upsell with your customers. And operation efficiency, it's very useful because you improve your process, and you have a better knowledge of your clients with your data, but also on the efficiency on the relationship and the process you are managing with your clients.
Thank you, Stephane. Thank you. So that's a great transition. I would like us now to shift to and focus on future and growth. So what I would like is each of you to share your top recommendation for the thousands of finance leaders joining us today. Maybe Amel, we can start with you.
Yeah, sure. So I'd say three. I think the first one probably is what I've seen. For the companies who managed through those tough times, I believe is what one of the secrets was a balanced portfolio, a mixed portfolio, where you don't have, let's say, all your eggs in one basket, but really having a portfolio that allows you to pivot and shift. Again, within your core business, right? Like, again, not trying to think we're past the time where we could do everything. A company can do a lot of things, but really within what you do is to be able to have a bit of a balanced portfolio to help you kind of survive. An example, I think Uber is a good example for COVID, when the drives and the trips went down to zero within a day. Eats were there too, and Eats was quite small. The food delivery business was quite small, and it completely shifted the dynamic of the business. And it's really the food that made Uber survive through the crisis, and then come back to the ride business when it was over. So I think just having a balanced portfolio, whatever you do, to make sure that you de-risk a bit your business, I think is critical. And stay agile, right? It's a bit of a buzzword and it's quite generic, but it's a reality. It's really how do we adapt as quickly as possible and respond to the market quickly. Today, the companies that are really winning are the ones who are the quickest to get back to the market in in obviously an efficient way. And I think setting up the processes as well, not have too much bureaucracy as well. And even like on when you're making decision, making sure that you have less friction as possible, with as much data as possible to really be very quick into answering to the market. And I would say the last one, I mean, we were talking about technology, is, as I said, just test. I think it's not perfect, and it's definitely not going to be perfect, and we should not wait for it to be perfect. And I think experimenting with the tools, testing them, I think it can bring a lot of value as we test it.
Thank you. Philippe, you want to continue?
Sure. Wow, there is so many things to say. So we're speaking to CFOs here, right? So guys, hear your voice, because the vision, you have the unique vision of compliance, finance, business. So that's the first thing. The second thing, Amel said, you know what, the winners are the guys that are quick. So a lot of people are asking me, hey, what is this deal speed? And I'm saying, you know what's not deal speed? It's anticipation. So there is no speed, there is anticipation. And anticipation is two things. We spoke about FP&A, etc. But there is something else. What's your plan B? What's your plan C? On every single thing. You're a fintech. Your Citibank is going to tell you, hey man, you know what? We have a problem with what you do today. We don't have appetite for your risk. What are you doing? You got the second bank? You got the solution? This country, you can't work there anymore. Do you have enough to balance your story? You need to reduce suddenly the size of the company. How do you do it? You can't, as a CFO, you must be there whenever the CEO is asking you, hey, you know what, we're in this situation, what you gonna do? You need to have it ready. You have it ready. Say, hey, this is what we do. This is what we're gonna do. This is the plan. This is plan B, it's plan C. It's ready. So I think that to make your voice hear, and people need to hear, right? That it's not what it was. So we need to be serious. We need to think about being super focused, not no gesticulation, but also yourself in your job. Be ready. You should never be in situation where your board, your CEO will come and tell you, "Wow, we have this situation. What are we gonna do?" And you're not ready. You don't have this plan B, this plan C, and then this vision of balancing the business, as Amel said, portfolio. Yeah. So what is it? Balancing the business. You cannot be only one business. Cannot depend on only one country, only one region. Same with the people. Same with everything. I think that it's very very important to be there, and that's the job. The job is not to, hey, to be a fireman. It's not working. You need to be ready. So that's my recommendation for my colleague CFOs.
Thank you. Stephane, do you have more ideas?
Yes, I can combine, because I think we have all the idea. If I just want to have my key takeaway first, I think as a CFO, you need to set realistic target for your people, because they need to have a clear vision. It's we are high volatility environment, so we need to be very focused. And we talk about SaaS industry, Alexis. So what does it mean, your net retention now? How do you cross sell? What is the rule of 40? How we can balance between, as Amel said, the profitability and growth now? So we need to have clear guidelines in terms of key result and simplicity of your target. And you should communicate clearly this vision and target to your organization. That's the first thing. Second one, we discussed, I think, more operational rigor. You need to be efficient. You need to serve your customer, and you need to make it happen and to make it simple for your business to execute. It will be my second recommendation. Another one is this principle that Philippe just highlighted, this optionality. You need to have option E, B, C. We are in a high volatility environment. You need to have, for every important decision, at least 3 options. And as a CFO, as Philippe said, and Amel, you are at the top of the strategic agenda, but you have also the data. And that's what you need also, is to digitalize your business. You need to understand what's going on with your business, with your customers, with your pricing. What does it mean in every country, geography, and leverage now all this new generation of technology with AI, Gen I, to invest on key people. Philippe was talking about the FP&A. That's critical to balance between the data, the decision, and the execution. So it would be my free recommendation. And you need to adapt. I think that's the key word. Volatility. You need to have this optionality and to adapt very, very quickly, as Amel said, to be the winner in this market.
Thank you. It was, I think, very, very insightful. I personally have learned a lot, and really appreciate your transparency. We still have around less than 10 minutes. Let's turn to our audience and address their Q&A. So we have a couple. The first one is someone asking if we have any tips for planning for the longer term when the landscape is changing so fast. So I don't know who's inspired by the question, who wants to take the first answer. Amel, maybe?
Yeah, I can take it. So I think planning is not as we used to do it before with the 5 years detailed planning. But planning will still remain, and at least from what I see, but it has to be a bit more strategic. Meaning every year, at least on how I run it, is every year you sit with your business and you do really a bottom up to understand, okay, what's at least the outlook for next year? Where do you want to go? At which, again, level of investment we're willing to go for each market? And what are the must deliverables? What are like the 5 things that we need to deliver on that market, on that specific market? Again, and it's directional. Plan is a number that we've put, and it's an aspiration, and it should be there because this is how you drive your team, you drive the business, you make sure that they are on the right track, and it's aligned as well with your global strategy. And then the plan, then you start delivering, and obviously there will always be gaps, and there'll always be things that you don't expect, but you at least you plan with the best of your knowledge with what you know. And as I said earlier, you just need to make sure that you have processes in place to be able to pivot when things shift significantly. And that's through forecast. You reforecast, for example, we reforecast monthly, we forecast at a weekly basis, and we kind of reshift investment on a weekly basis. We make sure every week that, okay, are we tracking versus what we said? And then we readjust as we go. So I think, again, planning will always be there. Again, you don't solve for precision and perfection there. You just need to be directional to hold everybody accountable and have the same vision. Everybody believe in the same thing and like going into one direction. And then business as the days goes, you just become business as usual as you adjust and you fix as you go. And it's always important as well mid-year to come back to your plan, understand what happened, why we're deviating, why there's such a big gap. And if there are things that you can do to fix it or not. But it's just, I would say it's a help, it's a support, rather than I need to stick to my plan.
Great. Thank you. And maybe, following up on that and on what Philippe mentioned, we have a question saying that when you talk about planning and plan B or C or D, how far you go with your teams to make it very quickly implementable, I would say. But on the other end, it takes a lot of time for everyone. So how far you go on that?
Hey, can you hear me? Yeah.
Yes.
Okay. So, I wanted to answer this question. Look, when you are doing the budget for the company, okay, you need to own the budget. Every stakeholder needs to own this budget, but you need to own the budget. My recommendation is that you really need to have a full model, detailed model. No approximation. The guy who wants to recruit this number of headcount for his sales. What does it mean in cost of marketing? What does it mean in terms of lead? What does it mean in terms of cost? What the guy is going to generate, etc., etc. Once you make your budget and all your plan, and this budget is fully, parameterized, then it's not difficult for you to think and to say, okay, I can work on an hypothesis that I will reduce the number of this, I will reduce the number of that. And if you have the right model, it should work for sure. You need to go back to the guy and tell him, hey, what you think? I have this plan where you have less people or more people. Understand that the stakeholder that you're working with, they are not so familiar with numbers like you are as a CFO. So you need to prepare that, work hard on this. There is nice solutions to help you on that. I don't want to make any advertisement, but like Pigment, for example, or others, that can help you. Good tools if you are not super strong with Excel and this and that you could use for this. But get your budget a real machine, a real model that will help you to move, take hypothesis, and be super fluid when you are going to work with the stakeholder and think about the different hypotheses that you need to have. And that's my recommendation. It's very practical recommendation, but that's the idea. The idea is that you need to be able to very rapidly, real time, create new situation so that it's super fluid in the conversation and you can show things to people. And I really say, outside of finance and in data, for sure, people and numbers in general, it's not this. So you need to really work on this and have the right models. That's my recommendation.
Thanks. One last question to conclude. It would be for you, Stephane. I have someone asking, what's one strategic growth opportunity CFOs should jump on right now, and one they should approach with caution in today's economy?
I will come back to the basic. I think we are in the market, and I'm talking about a SaaS industry. There is a consolidation. I think that's also, we know in this market, the rules of growth and profitability are change the environment. So I think you need to look also first to be very close on your budget, on your finance, because that's bring also opportunity. So that's my first point, and that's why to have this detailed plan and option A, B, C on your planning with the best scenario, base case, and the worst case from your budget is very important, because there is an opportunity, there is a market can be consolidated. That's my first recommendation. The second one is also to have a look, and as Amel said, when you are on a cross-border international expansion, you need to see what are the key drivers. It can be the FX currency change. It can be also a growth market. It can be a regulatory change. We can bring some opportunity for your business, because there is, taking the example of the invoicing, for example, in Europe, it will bring a lot of value for SaaS business, but will bring also a lot of operational efficiency for your customers. So you need to be able to be on the ground on the day-to-day, but the quality, the strategic thinking will be based also on the day-to-day management of your financial. If you are clear on your budget, if you are clear on what is your strategy in terms of growth, profitability, you can look also in terms of opportunities to understand the trends and to be able to invest if there is an opportunity for you. So it will be my recommendation.
Thank you, Stephane.
And also to work with advisor, I think, because this is also when you are to develop your ecosystem. Sorry, Alexis, I think it's very important. We are talking about investor. We are talking about also partners, your auditors. You are talking, very important to be in the ecosystem, because they will bring you all these outside ideas that sometimes you don't have enough time to analyze. So develop your ecosystem is very important for growth and opportunity also.
Thank you. Thanks a lot. We've reached the end of our time. Thanks you all for this discussion. I think we've managed to cover most of the questions we had. I think we had a very dense session with a lot of information. Again, I've learned a lot. So thank you all for that. If you have more questions, I encourage you to connect with us on LinkedIn. I'd like to give again a big thanks to CFO Connect for hosting today's session and bringing this incredible group together. Just a quick reminder, all sessions are recorded. You will receive an email with access to the full list of replays at the end of the conference. There is another session starting in 10 minutes on scaling, so I encourage you to stay on for that. And yeah, thank you all. I close things out now. Thank you again, everyone, for joining. Bye-bye.
Thanks
All.